The same week of the landmark Clarity Act, crypto lost $108 billion. In today alone, the US stock market lost $900 billion. In today's video breakdown, we're going to take a look at why that was. We're going to read our private community fundamental report, the boring stuff that everybody should be paying attention to, yet hardly anybody does. So that way, you all, as our followers here at CYPRX, have insights into what took place, why the market rally did not continue, the underlying landscape, the fundamentals behind the scenes that have weighed on risk asset sentiment over the last week in the past couple of trading sessions. So that way everybody's in the loop. We're also going to take a quick look at some accurate updated XRP technical analysis. So starting off first with the XRP TA, I want to first show you guys inside the private CYPRX community that our members are not capping when they say that the accuracy in this community is on a whole different level. So if we come up here, and just to show you guys timestamps, right? None of this would matter if timestamps didn't exist. Our institutional scalper utilizing our institutional software over 10 days in advance. This is Tuesday, May 5th, 2026, as you all can see here. Mentioned that if sellers cannot hold the $1.44 range, then $1.54 is going to be the buyer's next target. And he gave the screenshot of our institutional software, highlighting a sell wall at around $1.54. And again, you can see the date. This was on May 5th, 2026. Today, as of time of recording, it is the 15th of May. And yesterday, when XRP's price hit $1.54, it was May 14th. So 9 to 10 days in advance, our institutional software was able to detect that there was going to be a sell wall sitting at $1.54, where buyers were likely to get trapped by sellers. Passive sellers were likely to throw up a defense, trapping buyers and pushing price back down into discounted valuations. With that in mind, now we fast forward to more recent price action, and we come over here. You can see the total cryptocurrency market cap today alone lost around $66 billion, coming into our institutional dark pool at $2.6 trillion on the week, down about $110 to $108 billion at time of recording, of course. And taking a look real fast at XRP's price, you can see that we tapped into the $1.54 threshold. We rejected that institutional sell wall that our scalper had identified all the way back here on May 5th at the very onset of the month. Back when XRP's price was trading well below $1.43, we came straight up into $1.54, rejected it, and have now come back down into our dark pool area at $1.43. Now, the reason why I'm showing you all this is not to say that we told you so, but to hopefully show you guys that now is not the time for speculation. Now is not the time for unruly retail analysis. Now is the time for accuracy, real institutional data, and institutional grade tools that give you guys insights to market conditions and market liquidity that retail traders normally do not have access to. As I said here in this post, XRP went from $1.54 straight back down into the highlighted dark pool that we had identified with our software at $1.43 to the absolute pip. Our mission has always been bigger than calling levels. It is about helping the XRP army gain access to some of the most accurate institutional grade XRP analysis available in the retail space. In a market full of noise, hype, and opinions, real data, real liquidity, and real precision will always stand out. More and more of the XRP army is waking up to the institutional grade tools that we have built over the last 4 years in the CYPRX private community. And so here you guys can even see this is a day in advance, May 14th, 2026. I showed you guys this screenshot of XRP tapping into $1.54, and we have highlighted here the $1.43 threshold. Now, fast forward to today, you can see XRP pulled straight back down into $1.43. If we break $1.43, now going over some institutional targets, we're looking at if we are trading below $1.43, can buyers hold this last recent buy wall? If we start to see sellers show their hand and the buyers give way underneath of around $1.41, trailing and holding price action beneath $1.43, that opens the door for a deeper retracement back down into around $1.38 to $1.34 dark pool on XRP. If further downside persists, again, I'm still holding as the last line in the sand that $1.27 threshold in my mindset, where as long as we remain above $1.27, I remain optimistic on XRP's price that we could possibly see higher targets come into fruition. However, if at any moment in time $1.43 breaks, $1.34 breaks, and $1.27, that last line in the sand breaks, we're likely going to see the buyer stop losses underneath all of these lows turn into more aggressive sell volume, and we're likely going to see it result in some form of buy squeeze. If that scenario does come into fruition, to the downside, we have highlighted dark pools at around $1.18, 111, and 91 cents as our first bearish targets to the downside. Now, these are all higher time frame targets. And of course, you guys can see all the way back on May 5th how many days it took for the overall $1.54 target to come into fruition. So this is likely not going to happen overnight, but definitely keep these lower level targets on your radar in case we start to break these lower level boundaries. Now, if we can maintain price above $1.27, $1.34, and hold support at $1.43, upside targets still remain prevalent on XRP's price at around $1.54 as our first institutional sell wall that we need to overcome and hurdle above before we see any higher prices. If $1.54 is met and we can see buyers break above it, turn it into support, that'll open the door for a full blown retracement up into $1.62 to $1.77 as our first targets to the upside. Above $1.77, we'll highlight the $1.98 threshold. I'm sure that we will have an update before those targets are met. So those are our downside and upside targets on XRP. Remember that these targets are given on a daily and updated basis via our institutional scalper using our institutional software within the private CYPRX community. You guys can always head over to CYPRXtrading.com. We'd love to have you on the team if you'd like to access this level of accuracy, unprecedented in the retail space. I cannot stress enough, now is not the time for guessing. Now is the time for real data, real insights when they matter most. With that out of the way, yesterday I dropped a video breakdown for you all on YouTube. Hopefully, you guys tapped in and watched it because there was a gentleman sitting on a panel discussion explaining the whole Clarity Act process, explaining how long it will actually take. And yes, we saw some optimism flood into the digital asset space yesterday where valuations were high as optimism was flourishing. But since then, the optimism has since retraced, and the total cryptocurrency market cap is tapped back down into the $2.6 trillion threshold, losing over $66 billion the day after the Clarity Act. So let's ask ourselves why that is. Let's read today's fundamental report, and then I will end today's video breakdown, going over the boring stuff in detail. This is what we cover inside the private community. This is our today's private community report. We hand type these out on a daily basis to keep our private members in the loop with accurate, updated information. We share these fundamental reports inside our private CyPRX Discord, which all the community members have access to inside the fundamental updated section. If you guys want access to these updated documents, you guys are more than welcome. Head over to CyPRXtrading.com, tap in with us on the private community, and you guys have access to these Oracle reports that Mr. Mann shares. You guys have our fully hand typed out fundamental reports to keep yourselves in the loop with what's actually happening behind the scenes that most retail traders, the information that most retail traders are not focused on, but should be. So let's cover that landscape in detail. So, even though crypto yesterday found buyers and risk assets initially reacted positively to the advancement of the Clarity Act, today's price action is a reminder that this story is far from over. Yes, the Senate Banking Committee passing the Digital Asset Market Clarity Act was undeniably a historic step for the crypto industry, and traders immediately responded by bidding up high beta digital assets, pushing the total crypto market higher as optimism spread through the space. Tokens tied to institutional infrastructure such as XRP and Canton rallied sharply, while major assets like Bitcoin and Ethereum also caught a bid as markets began pricing in the possibility of long-awaited regulatory clarity. But beneath yesterday's bullish headlines, the reality is that the legislative battle is still in its early innings. What the market celebrated yesterday was not a law being passed, it was simply the clearing of one important checkpoint. The Clarity Act successfully advanced through the Senate Banking Committee, which gives the bill momentum, but it is still far from becoming enforceable legislation. The next hurdle is a full Senate vote, which is expected sometime in June, and that may prove far more challenging. Unlike the committee votes, where the bill passed with bipartisan support, the Senate floor could require as many as 60 votes, meaning Republicans will need significantly broader Democratic support if this legislation is going to move forward. That alone introduces uncertainty because many of the most controversial issues surrounding crypto legislation have not yet been fully settled. The latest version of the Clarity Act is also far more complex than earlier drafts. Lawmakers expanded the text substantially, adding new language around stablecoin rewards, insider trading restrictions, bankruptcy protections, and implementation timelines. One of the most closely watched additions is the compromise surrounding payment stablecoins, which would limit passive yield or deposit like rewards while still leaving room for certain transaction based incentives under tighter oversight. That matters because it directly impacts how many decentralized finance protocols, payment platforms, and yield based crypto products may operate under future US regulation. The bill also introduces insider trading provisions specifically for digital assets, something that institutional players have been pushing for as the market matures. In addition, it creates insolvency protections that would allow counterparties to close out digital commodity positions and access collateral during bankruptcy, similar to protections already seen in traditional derivatives markets. For institutional money, that is a major step towards legitimizing digital asset markets, but implementation is still a long road ahead. With the bill proposing a general 360-day rollout after enactment, and some sections potentially delayed even further depending on regulatory rulemaking by agencies like the US Securities and Exchange Commission and the Commodity Futures Trading Commission. That is why today's risk off move is important in the context. While crypto pumped yesterday on optimism, macro markets remind traders that regulatory headlines alone cannot override broader liquidity conditions. Rising oil prices, hotter inflation data, and increasing treasury yields, along with growing expectations of potential Fed tightening, which all created a much heavier macro backdrop, regardless of the optimism that Clarity Act bring. In other words, while the Clarity Act did give crypto a short term narrative boost, the market quickly realized that the bill is far from crossing the finish line. In the meantime, global liquidity conditions still matter the most. The harder fight now moves to the Senate floor, where issues like DeFi oversight, anti money laundering controls, ethic provisions, stablecoin reward structures, and agency jurisdiction could all reshape the final language. Even if the Senate passes it, the bill will still need to be reconciled with the House version before ultimately landing on the President Trump's desk for final approval. So, yes, yesterday the pump made sense, but markets love progress, and for crypto, regulatory clarity has been one of the biggest missing pieces. But today's pullback is a healthy reminder that the clarity story is not over. It has momentum, but the real battle, the one that determines whether this becomes historic legislation or another delayed political fight, is only just beginning. Today's session shifted decisively into a risk off regime, and the price action reflected that exactly. The total crypto market cap shed more than $60 billion, coming back down to the overall $2.6 trillion threshold and over $108 billion on the week, while Nasdaq retraced directly into the 29150 dark pool level that we had been monitoring as institutional liquidity started getting repriced. What changed was not just technical analysis. Underneath the surface, macro conditions deteriorated across multiple different fronts at once, creating the perfect environment for profit taking and high beta risk assets. The first major catalyst came from a renewed surge in inflationary fears. After already receiving hotter than expected CPI and PPI prints earlier on in the week, markets were hit with another wave of concern as crude oil continued its aggressive climb. Crude oil prices pushed to $105 per barrel, with the overall crude oil trading today at around $109 per barrel. That move in energy immediately reignited fears that the disinflationary story the market had been pricing in for months may be breaking down. Higher oil doesn't just impact gasoline, it flows through transportation, manufacturing, logistics, food cost, and eventually consumer inflation itself. For many traders on Wall Street today, it started to feel eerily similar to 2022, when energy shocks forced the Federal Reserve into an aggressive tightening cycle. Those inflationary fears were amplified by geopolitical disappointment. We had President Donald Trump returning from his high stakes summit with the Chinese President Xi Jinping without any meaningful breakthrough regarding the reopening of the Strait of Hormuz. Markets had quietly been pricing in at least some diplomatic progress that could ease global supply concerns and bring crude oil prices down. Instead, traders were left with headline optimism and very few concrete solutions. With the strait still unresolved, energy traders continued bidding oil higher, and equity markets immediately began repricing the risk of a prolonged supply shock. As oil surged, bond markets began doing what equity traders feared most. They started pricing in the possibility that the Federal Reserve may not just delay cuts, but could potentially be forced back towards rate hikes if inflation proves sticky and troublesome. Rate hike probabilities for later this year moved closer towards 50 to 40% range, and Treasury yields exploded higher across the curve. The 10-year Treasury yield surged toward 4.6%, the 30-year pushed above 5.1%, and even the policy sensitive 2-year climbed back above 4% for the first time in nearly a year. When yields rise this aggressively, money naturally rotates away from speculative assets like crypto, small caps, and high growth tech into safer fixed income opportunities. That shift was clearly visible throughout today's session. Under the surface, market internal showed broad liquidation. Semiconductor stocks, which have largely been carrying the AI driven rally, were hit aggressively, with the SOX dropping roughly around 4%. Biotech sold off more than 2.5%. Small caps weakened sharply. Precious metals, miners were absolutely crushed with losses near 7%. Nearly every major sector inside the S&P 500 closed in the red outside of energy. The one place that money continued flowing was energy, as traders positioned for the possibility of sustained supply disruptions and prolonged inflationary pressures. Another unexpected blow came from Boeing. Wall Street had been anticipating a blockbuster aircraft order out of China. Some estimates were as high as 500 jets, which many believed would act as another bullish catalyst for industrials and transports. Instead, President Trump announced a much smaller 200 jet deal, which was far below what Wall Street was expecting. The disappointment triggered Boeing's steepest sell off in 6 months, removing another pillar of bullish sentiment from the broader market and reinforcing the idea that expectations across multiple fronts were simply too high coming in today. For tech specifically, this created the perfect storm. The Nasdaq had been running on AI optimism, momentum chasing, and expectations of eventual Fed easing. But when oil started rising, yields started rising, hotter inflation and geopolitical uncertainty all hit at once, traders had little reason to keep paying premium valuations for long duration growth assets. That's why the Nasdaq sold off directly into the 29,150 dark pool level. Assets were being repriced against a potentially higher for longer interest rate environment. Crypto naturally followed the risk off suit. Digital assets, we know, tend to thrive in environments where liquidity is expanding, yields are falling, and risk appetite is strong. Today was the exact opposite. Rising treasury yields, a stronger inflationary narrative, geopolitical stress, and uncertainty around monetary policy all created a liquidity drain across speculative markets. That is why crypto gave back over $60 billion in valuation today and over $108 billion on the week as traders reduced exposure and rotated into defensive plays. Looking ahead next week now becomes extremely important. We'll be focused heavily on the upcoming FOMC meeting in minutes for any hint of how serious the Fed is becoming about inflation reaccelerating. Earnings from Nvidia will likely determine whether AI enthusiasm can stabilize the Nasdaq, while housing data, PMI readings, and consumer sentiment, along with manufacturing surveys, will tell us whether the broader economy can absorb higher energy prices without rolling over. If oil remains above $100 and inflation data continues surprising to the upside, along with Fed Reserve speakers remaining more hawkish leaning, supporting the need for a prolonged higher interest rate environment, markets may continue pricing out cuts altogether, keeping pressure on both crypto and equities in the near term. So, hopefully, you guys enjoyed that thorough breakdown as to why the market landscape today was a little bit more risk sensitive. As we saw the total cryptocurrency market and specifically NASDAQ, as a lot of us trade NASDAQ inside the private community, pull back into lower level dark pools. Hope that you guys enjoyed that. If you did, smash that thumbs up button, subscribe to the platform. We do appreciate the love and the support, accurately keeping you guys in the loop. I know that all that stuff was the boring stuff that nobody wants to hear, but the real traders, the real investors, the people that actually want to stay and remain in the game for a prolonged period of time, these are the types of insights that you should and need to be paying attention to remain adaptive and competitive in this game. With that being said, as always, be cognizant, be aware out there. Don't forget that at any point in time, you guys want access to these institutional dark pools. You all want access to our institutional insights. You guys can always head over to CYPRXtrading.com. You can tap in with us inside the private CYPRX Discord, daily reports, daily updates in terms of dark pools and fundamentals, daily Zoom calls, fundamental breakdowns, crypto research. It's all available at your fingertips. We'd love to have you on the team. Many blessings, and I'll see you guys in the next video update.